Good morning, everybody. Those of you who have been IMing that you're not hearing any audio, there's a very good reason why. It's that we weren't starting the webinar yet. We're just letting some people log on or get on. It always seems like for the first couple, 3 minutes we have some laggards, and that's understandable. People got things to do in the morning, and the 8:30 hour can come up on you very quickly. So right now, you know, it's Wednesday. We got the Fed coming out later this morning, Pacific time, 11:15, 2:15 for those of you on the East Coast, and for those of you in flyover country, either 12:15 or 1:15. So, in any case, what's the market looking for? QE3, I suppose. But what you got going on? Look at the Nasdaq index first of all, and you're now in a different sort of a trading range, and you were in this upside trading range until last week. And remember, last Thursday the market wasn't looking so hot. And things look pretty grim. Apple was breaking down, gapping down, and of course the next day you gap up on comments from Mario Draghi, who's the head of the ECB rather, and the next day you go higher on Friday. So now we spend the next 3 days of this week. You get a distribution day yesterday with volume picking up here, and and today you're kind of reversing. You don't have heavier volume on the Nasdaq right now, but hey, Dr. K, is that number right on the NYSE volume? It's showing a big increase there, like 120-something%. Last I checked, that doesn't look right. Is there something going on that I'm missing here?
That doesn't. I don't know. I'm seeing on eSignal. I don't know why that's showing it like that.
Yeah, it's kind of bizarre. Oh well.
I wouldn't worry about it. We can easily get this data.
You're probably not seeing any real volume here today because there just isn't anything going on. But basically what you've done now is you've got this you're in a new range here as I can see it. And you got these little peaks here and this down here. So now you're going this way, you're in a new downtrend, you're going to bounce to the downside. And it wouldn't surprise me. I mean, this market strikes me more as a market that's getting batted around by high-frequency traders and algos and whatever other boogeyman are out there to make life difficult for us regular guy traders. But it's kind of what it is, you know. So if you're trying to trade this market, it's a little bit spotty, and you probably feel that, even with the sharp move off of the lows of last week on Thursday. Let's see, was that and the gap up on Friday. Is this right? What am I looking at here? No, it was Wednesday, Thursday, and then Friday. Yeah, so the Thursday gap up and the Friday gap up, and now you look like you're consolidating. But you know, I'd be inclined to think that the market's going to pull back in here and maybe test the lower part of this range. Just to give you some idea here, for those of you who are invested in our managed accounts program, you can observe that the trades we made, we tried taking some positions. Let me get to a daily chart here. And we essentially did it, we took positions in 3 stocks. And for those of you who were paying attention on Thursday morning, we sent out a short sale setup alert on Apple, revising our view that the stock was no longer a short and that we were inclined to go long. And that's exactly what I did. I went long the stock starting around 578 up to 583, taking a position here. And of course the thing has run up. And now what you're looking at here, let's make this a little smaller. You can see the whole picture, but what you're looking at here now is you're trying to break out of this handle, but for all you know, you go 3 days straight up, and notice how the first 2 days you don't get a lot of volume, so you know nobody's really believing it, and most people probably think at this point you're just filling the gap. Okay, finally on this day here, there's some news that allegedly they're going to be included on the Dow index and that they're going to split the stock, and so the whole world starts to rush in. You get above average trading volume yesterday, but you come to the peak of the range. I'm long the stock. We sold it yesterday around 610. And as stocks will often do, it gapped up to 617 this morning, but I didn't really see that as either being here or there. It's just kind of what it is. But now you're reversing the volumes up today, and I wouldn't be surprised to see it pull back. Now, whether Apple breaks down or not from here is something that we'd have to see. I think if the market started to get hit and we went to the sell signal perhaps, or you start to see some heavy volume selling, Apple might be a short here, and it could break down to the 50-day moving average again. But you did get everybody faked out, but you came down, you gapped down last week right on top of this area of congestion. So if it wasn't going to break down, it probably had a bounce in it, and you could kind of feel it if you were short. The stock would start to sell down to the 370 or the 570 level, and then it would get some lift there. And you notice that people are standing there buying it, and it holds tight the second day here of after the gap down, you don't have a lot of volume in there. So there's not a lot of follow-up selling. So on Thursday morning, I kind of felt that this thing's going to pop through the 50-day and go for a little short squeezing jaunt here, which it did. And now you're in this handle, you run up to the top, and maybe you're going to pull back. So this is kind of fluid. I went long the stock here. It's a 3-day trade. In this market, that seems to be all there is. The other one we went after here, and we took a 20% position in Apple, 10% position in Amazon on the breakout right about here. It's kind of drifting in. You know, again, the action is neither here nor there, but no real follow-through. It comes out probably on a big short squeeze on earnings. They're still losing a lot of money and losses expected next week. But, you know, it could pull into 230, maybe even lower. But, you know, I don't know if this really has any juice in it and whether this breakout will sustain itself. Dr. K, you have any take on Amazon?
Well, yeah, it's sort of you know, what we were discussing last week. Amazon has not really proven itself as a stock that's going to just change its colors. It's been a slow stock for quite some time. And while the weekly chart looks very constructive, I'd like to see a little more evidence, price momentum evidence, before I would consider buying it. Otherwise, as far as I'm concerned, it's going to remain a slow stock. I know there's the argument that it is changing its fundamental strategies so that it can embrace the cloud, and I would like to see confirmation in terms of the price volume action before I'm a believer. Because that sort of thing can take a number of quarters to do. And so Amazon may chug along. By chugging, I mean in a slow manner, like it has over the last couple of years.
Yeah, or it could just top on a failed breakout, which wouldn't surprise me either. Our thinking on this was that if we took a position, we wanted to see it act a little better and maybe move through the 240 level towards 250. And so we kept positions on a very tight leash because I think that's what you need to do in this market. So if you have a thesis about a stock that it should move to a certain level or show a certain level of follow-up buying, which Amazon did not the day after the breakout, we give it a couple of days and then we just dump it. So I think right now we're trading at around, where are we?
We're at 232.
232. Yeah, I mean, I could see it pulling in, but we'll see what happens. But, you know, on the bump today, I took a little short position. It's just a test to see if it fails. We'll see what happens there. But, you know, that is kind of, it's just not really happening. Price line, we bought around 370 or 675 rather, and it ran up nicely, and then it reversed. Yesterday it came down. We sold out at 671, so took a tiny loss on that position. But you see now it's blowing back below the 50-day moving average. And if this is such a strong move, that shouldn't be happening, okay? And when that sort of stuff happens, it's just telling me, and I'm guessing Dr. K too, that you're just in this sloppy sort of HFT algo swamp where things are getting batted around. You can kind of see the action in price line is similar to the indexes in terms of the back and forth movement. So, you know, it's excuse me, it's neither here nor there. So, to me, outside of 3-day trades where you can pick up 5 or 10% in your account if you buy a 100% position, yeah, that's always a lot of fun. But is it the kind of market you really want to be investing in? Because how many correct trades are you going to make that way if you're trying to play everything on a nice move in a stock that lasts for 3 whole days? So that's not really a market to be playing in heavily, in my view. So, you know, as I was saying, in the Managed Account Program, Strategy C, which invests in stocks, Strategy A and B use the market direction model and ETFs. We took Apple, and Apple turned out to be the best trade. Amazon went nowhere. Priceline, we blew out of it before it started to come down below the 50-day. And LinkedIn, we bought around 103 and change. And it's just kind of sloppy here, and we're definitely not going to hold that going into earnings. So we just blow everything out and go to cash, take our profits in Apple, take small losses in Priceline, LinkedIn, and Amazon, and sit in cash and wait. Just because the market doesn't seem quite right to us, and you're at an area here where I think that you're going to run into some resistance, as we're showing on this chart on the NASDAQ. There's resistance here now, and it would need to break out from there. So in strategies A and B, where we use ETFs, and for those of you using the market direction model, if you bought down in here, you could take some partial profits and then look to come back in if you did get a bona fide breakout through this level. My guess is I don't think you're going to see it happen anytime soon, and we're going to remain in this soup for a little while. Now the thing with the market is if you look at it on a weekly chart, so let's go to a weekly chart here of the NASDAQ. Forget the volume because that's not right. But if you look at on a weekly chart, the prior corrections that we had, you know, as tough as 2012 is for a lot of people, if you look at it, this is a logarithmic chart, so it's all adjusted. So in fact, you would expect at a higher price if it was arithmetic, you'd have wider ranges. But notice how in the correction of 2010, during the summer of 2010, that was a real wide, loose, ugly-looking correction with a lot of swings back and forth on a weekly basis, and then you came out of there very sharply. Same thing last coming out of, say, late fall and early winter, coming out in January, you have the same situation. Look how volatile this is on a weekly basis. And then notice how this seems relatively well contained. Now, some people might argue that that is a positive for the market, but the one thing you'll notice about markets when they roll over is that they tend to look pretty well contained just before they roll over. So my thinking is, I'm wondering if this is just part of the calm before the storm and you're going to roll over again on a down leg, and it's more like the action you see in here, which is relatively better contained than it is here, but it doesn't tell you necessarily that the market's going to go higher. So if you follow what I'm saying, I'm basically saying that the market is quiet right now, and yeah, the volatility isn't as great as it has been during other corrections, but that could also be telling you that you're in a position where this sort of contained action on a weekly basis may start to come apart. So I'm kind of open to any possibilities right now. We're not really trying to tell the market what to do. We just try to roll with trades. But what I find is when I'm in an environment where I have to be using tricks, like buying Apple off of the break, the gap down below the 50-day moving average, and getting a 5% move in the stock, which is great if you go 100% in. That's about what we did in our fund. But you're not going to make a lot of money. You're not going to make big money unless you can get things to trend. And so when you have your best trade being the bottom fish, and the other three are pocket pivots and breakouts through nice-looking chart areas like Amazon, that's a breakout. Price line, you get the pocket pivot coming up. Actually, I should probably be showing the daily chart here. You got the pocket pivot coming up, and you got LinkedIn, which is sort of a reversal type pocket pivot here, which looked okay. And of course, it did its same old thing, runs up to the highs on low volume 3 days ago, and now we're rolling over today through the 50-day moving average and coming lower. Those are the stocks, those are the trades that should have been working better. And so when you have those not working, and this one worked, of the 4 trades that we took, this one works the best. Yeah, that's kind of telling you that you're not really in a perfectly aligned market. So I think for the most part, that's what our trades told us, the ones that we took over the last few days. And they're not very many things. I'll get to more stocks, but first I wanted to turn it over to Dr. K and let him discuss his take on what's going on with the market and the market direction model. Dr. K?
Yeah, well, like Gil was saying, this has been a very sloppy market this year, even more so than 2011, I would say. 2012 has been very difficult for most people that we've been tracking as well, including the trend following wizards. And it's no surprise because, especially when you look at the chart formations of, for instance, the NASDAQ on a daily, it just doesn't get going in either direction, and it's very sawtooth. I would say that in 2011 we did get a few trends, not very many, but we did get a few that we were able to catch, and we haven't really seen that this year. We did get also in August through October, we had some wide banding moves in the NASDAQ, and that allowed the model to capture some appreciable short-term gains by being on the right side of that. But this year, it's been in the last few months, it's been very sloppy and soggy. We're not getting real concerted moves in either direction, and that, of course, is the most challenging kind of environment. Fortunately, this kind of mushy environment doesn't persist. It never does. The market's going to find resolution one way or the other. One way it could find resolution to the upside is if Mario Draghi actually takes what he said last Thursday and puts action to his words. I think the market's looking for something concrete on his part, and we are going to hear from him on Thursday. So that could catalyze the market in either direction, depending on how on what he says and what he does. And then, of course, the Fed comes out with their announcement today at 2:15 p.m. Eastern Time. I don't expect anything new from the Fed. It's going to be keep interest rates low and no mention of QE3. They don't need to mention QE3, or they don't need to roll it out anyway until I think until they have to, until I think their hand is forced, and their hand clearly is not being forced at this time. So I don't think today's Fed announcement is going to really create any catalyst for the market one way or the other. But tomorrow will be more interesting.
Dr. K, what about the ECB meeting tomorrow?
Sorry?
What about the ECB meeting tomorrow? Do you think they're going to do anything, or do you think they'll sit on their hands until they're able to marshal?
If they don't take action, I think that would cause the market to reverse the gains it made last week, the short, sharp gains it made at the end of last week. I believe the market wants to hear some confirmation from Draghi on what he had said last Thursday. So. Yes. Whether I mean, the ball's in Draghi's court as far as I'm concerned. So tomorrow is going to be an interesting day.
Yeah, I think. Let's see. I think Draghi's probably talking out of his culo, as we like to say in the old country, when he says those sorts of things. Like I was pointing out last week.
All central banks and all politicians.
And they talk about speculators, and we will teach speculators a lesson, blah, blah, blah. It's a whole saw of blaming speculators for the problems that they create. So I don't know if we can really expect them to do anything more than kick the can down the road. But, when you've got a market and everything you own is really, whether it's profitable or not, is going to be determined by what comes out of the mouths of a bunch of Eurocrats or Fed heads. It's really not an environment I want to be participating on in a meaningful way. So somebody points out, as far as the NYSE volume being inflated this morning, it says NYSE had trading glitches this AM that inflated volume. Okay. Thank you, electronic trading. Let's see. Yeah, there's several people put that out. There's the advantage of having a nice community of VOSI members who are all fairly knowledgeable, and everybody's watching, so we get a good sense of what's really going on when you see things like this. Let's see. I'm just looking through some of the questions here. Okay, so what's exciting here? Maybe a couple of stocks we've been looking at the last few days. Regeneron. My guess is this thing's going to need to form a handle, so it's going sideways. Not a buyer here. If it had to pull back down to 130. Yesterday there was some news the FDA did not approve one of their drugs. And so the stock pre-open looked like it was going to open down about 128, 130. Never really got there, and it's holding up okay. This one looks okay, but it may need to be able to handle for a while, and that could go on through the rest of August and into fall, September, October. Now, the September-October time frame is generally when you see major developments in a trend start, or trends begin. And so we might expect that August could be slushy and mushy and not really much going on there. For a period of time until we get through what is the summer for the market. I know fall doesn't really begin until when? Is it October, Dr. K, or whatever? But summer ends at the end of August and following Labor Day, when allegedly everybody comes back to work. So, but if high-frequency trading programs are running the market these days, nobody has to work because you just let the computers keep doing their thing. In any case, you can see Regeneron now turning red. It had gapped up earlier this morning. And typical story. There's not a lot of progress. You kind of got to be there on the news day when something happens and drive something up sharply, like Amazon up on the day of earnings, which is a bit of a funky move. Last week, I think I told you guys I would short. You could short a 10% position. I actually shorted a 5% position into earnings, and then the stock broke down at about the 203, 204 level after hours. And didn't cover it as a tiny position. Want to see what it would do the next day. Well, as soon as it started to turn, I just covered that tiny position, then went heavy long, and made some money on the day. But net it really doesn't pan out into anything so far, and the stock's starting to move lower. It wouldn't surprise me to come in if it came right into, say, the 10-day moving average here at 227, 228. That wouldn't surprise me. But like Dr. K says, it's probably a slow stock, and I think that was confirmed by the fact that it could not follow through on the breakout. So some other stocks that we've been looking at. Let's see, what is that? The fresh market. Yeah, there's a breakout, and of course it's going nowhere. Stalls out yesterday. Am I a buyer? I don't think so. What else is looking? Facebook has not looked good. What a dog. I wouldn't touch it with a 10-foot pole, but what is that? How does that bode for the social networking group in general, I would not be buying LinkedIn into earnings at this point, unless it showed me some real good strength over the last few days, breaking out of this area with some volume, or at least showing some strong volume. I might hold a 10% position in earnings, but this kind of action, I don't see why it's worth playing. So let's see. I'm just going to run through a few of these. Let's see. SWI, Solar Winds. There's a nice big gap up. Why did they trade so much volume yesterday? Anybody know, Dr. K?
No, that's a good question. And 9.4 million. That's like 10, almost 10-fold.
Maybe
Let's see. Let me check the news.
Sold it to them. Let them cover. Now they're going to take it down. It wouldn't surprise me.
I'm not seeing any news yesterday of any.
What is that about? Anybody know? Anybody out there know?
Really. Oh, I see. It was added to the. It's going to be added to the S&P 400. But
okay.
That must have something to do with it. Yeah.
Yeah. Somebody's asking about.
Yeah, there's a huge sell imbalance at the end of the day as well. So.
Yeah. Somebody's asking about a rising wedge pattern on the S&P, and that's yeah. This is what they're looking at. So basically, I mean, if you want to connect this low to this low. Or you could do this, connect this low to these lows, depending on how you want to draw it. That's the beauty of technical analysis. You can see this wedge, and it is a rising wedge. So theoretically, a break below, depending on how you want to draw it, one of these lines is bearish, and that's basically what's going on. And that's another reason, technically, you see this pattern, and this doesn't look right. Usually you'll get a move up and then a little bit more of a drift sideways as the market sets up, and it just seems like you're getting this bizarre movement, which, like I said, I'm just beginning to become cynical about the market and thinking that it's all driven right now by high-frequency trading programs just slapping things around, and that's about it. You can see Apple coming down 606.78, so they're reversing.
If the market doesn't really have a sense of direction, then HFT trading is going to take over, and it's going to become pretty erratic and completely short, very, very short-term driven on an intraday level. And of course, the market's driven by all sorts of forces, and it's not very common for the market to really maintain this this lack of direction. So it's something that should catalyze it one way or the other.
Yeah. Let's see. I'm going to go through some questions here. Whipsaw Wednesday. Somebody's asking, what's up with all the reversals? That's what this market is like. There you go, NetSuite. We were looking at this last week. We never went for it. We didn't put anything out on a Bible gap up because it's pretty erratic here. It's not really coming out of a. Let me try and make it look less erratic, although I doubt if it's going to help. It's a pretty erratic stock and gaps up on earnings. You're probably just running a bunch of shorts over, and that's all that is. There's really not anything to say about it. We never told anybody to buy it, so it's just nutty action. I think it's typical of why this market is screwed up. NUS, that's a
you want to avoid these types of stocks because if you look at NetSuite, it tends to violate the 50-day routinely, and I don't like stocks like that. They're too erratic, and not only that, it also violated the 200-day. Last year, so it's just sloppy.
New Skin, that may be a short. Does this thing trade over 1 million shares a day? If it is, I'd probably short it here.
Yeah, it's just over 1 million.
And you're looking at this on a weekly chart. You got a left shoulder, a head here, and a right shoulder. So I've been watching this one for a while. Problem is, I haven't been able to borrow it, and I tried to come after it in here and couldn't borrow it. And watching it come up now on this reversal, I'd love to short it, but I can't borrow it. So I hope some of you out there could borrow it. CLGX, again, not a stock that we've been following, but crazy action. I don't know what that's about. WPI, Watson Pharmaceuticals, looked good. Look at this crazy move. I mean, if you own this stock and you bought it, say, in here on this pocket pivot, for example, you might have been out of it here, but if you were holding it into here, I think you'd have to be selling it here, and that just screws you up. And that's what I'm talking about. This is sort of the crap that you see in this market, and there's nothing. There's no rhythm, there's no rhyme, there's no reason to any of this. I'll give you an example. I was trading in my own account with Zillow. I just thought I'd try testing a position off of this level here, and then I noticed I was buying, I think, around 38 and change, just right in here on Monday. And towards the end of the day, all of a sudden the thing starts jacking to 41 on some volume, about 20-something thousand shares. We were joking that was the O'Neill desk buying it because we remember back back when we traded there was a trader on the desk. When you put an order in, he would say, "All right, buy them in line." And I thought buy them in line was like, buy the stock and don't let it get out of line, keep it in line. And then you see the stock jack up a buck because I guess in line means take every offer between here and Timbuktu, and that's what would happen. So we were joking that maybe that's what it was, but I probably wasn't. So I just want to make that clear. But that was a joke internally, knowing what we know about the desk over there. I don't know if they still have a desk or not, or whether they laid everybody off. But in any case, somebody sold into that, and yesterday the stock was breaking down. Of course, today they gap it up over 38. So we were buying in here a little bit, and as soon as it busted 38, I'm just gone. And of course, it went lower, and then today they gap it up to, I think, 38.55 is where you opened up. Is that right? 38.31 actually. And now it's breaking down. So kind of an orderly pullback, but now it's starting to get less orderly. But just the movement, the gaps up, the gaps down. I mean, maybe I'm getting too old here, Dr. K, but I used to remember a market that used to trade a little more continuously. In other words, if after yesterday we had a pickup in volume, the index were soft, stocks were acting a little weird. So you might expect the market this morning to come in either be flat or maybe slightly down. Nothing drastic. But then you have this big gap up, 18 points on the NASDAQ futures, and everything's just kind of discombobulated. It's just all sort of bizarre, and that's kind of how this market is. So, so like I said, we don't really see.
We've seen these periods before, and they don't last very long. But when they do occur, they're very frustrating. And that was the nice thing of the 90s, is that periods like this were very rare. Although, I mean, that said, there was a 6-month period of it in 1999 of all years, which really, I mean, the overall sentiment on the market was pretty negative at that by October, before the market really took off.
Yeah, well,
and of course, this decade we've had lots of pockets, lots of periods where the markets are compressed and sideways. For instance, 2004 till August of 2006 was there were lots of. You didn't have the moves that you did from the 90s, which is how the pocket pivot was born and the Bible gap up. All those ideas just simply because base breakouts weren't working, and it was a very frustrating time for me, as well as I'd imagine a lot of traders who were trading by the base breakout strategy and expecting the market to make nice moves. But now the market's dealing us a whole different hand here since 2009 with QE. Although we did get some nice uptrends in 2009 and 2010, then 2011 all the uptrends pretty much dried out. 2011 onward, and then we got almost what I call a fictitious uptrend early this year, January, February. That was just led by very little volume and very little leadership, except for maybe just like one apple on the tree, literally Apple Computer and a couple other names. So it wasn't the type of concerted upward trending environment that you would normally ever see, and that again is supported by virtually all these trend followers who did not catch that trend early this year from January, the first quarter of this year. Just by March, all these guys were actually down. And these are, I mean, when I say these guys, I mean these are the guys interviewed by Mark Schwager and what's the trend following wizards, Michael Covell, Jack Schwager, Michael Covell. So these are guys that have been seasoned in the markets for years and years. So we are in a different environment, and it won't persist because always these environments come to an end. They always have, and that's based on over 100 years of market study. So we just have to be patient.
I don't know, over 100 years of market studies, Dr. K, have you ever seen a period where interest rates have remained at 0% for so long? Have you ever seen a period where you've seen
early 50s
on the level? So
interest rates,
how long did they go on?
Long-term interest rates were actually lower than they are right now in part of the 50s for a number of years.
What about short-term rates?
Most all rates were actually quite suppressed in the early 50s, but then that was a totally different period. Things were much better in the 50s than they were right now. Right now, I would normally say the market's going to head a lot lower, but then the QE is the wild card, which is supporting the markets artificially.
Yeah.
So we have it's a different. The early 50s environment was a one-of-a-kind thing. It was a different environment. All these environments in their way are unique, and certainly we're in a unique one right now. But that said, there will be pockets of opportunity, like 2011. Most people lost money. We did well because we were able to catch the very few trends that did emerge that year. We're going to get more trends. It's just a matter of being patient and being frustrated in the meantime.
Yeah, I'm going golfing. Forget this. Um, but that said, what about a lot of people asked us about Bill Gross's comments yesterday about 6% growth in the stock market, outperforming GDP over the long term, and that is going to stop. And somebody emailed wanting to know our thoughts on something like this. I don't know. What Bill Gross says is what Bill Gross says. Regardless of what the indexes do, there's always going to be leading stocks that act well, and there will be trends occurring in the market that are playable. That's my take, Dr. K.
Yeah, exactly. I mean, I saw that question, and I think they also wanted to know, because GDP is being run into the ground. Is there a way to use that to one's advantage when trading the markets? Not really, not that I've seen. I've done long-term GDP studies, way back, actually back in my grad school days, because I was fascinated by using some of these metrics to time the market. But ultimately, there's too much chaos over the decades that allow one to use something so simple as GDP as a market timing method. And it's also too long term. I found that it comes back to the basics. The best way to deal with this is keep your stops tight when you're going through a mushy period like we are right now. And as the market does start to trend, pyramid your position. That's exactly what we did last year. We weren't exactly sure that these trends we embarked on were going to work. But as they did continue to work, we continued to pyramid the position. So we had a very substantial position in these trending instruments by the time we had to make the exit, and did quite well. And those made up all the difference.
The only thing we owned was silver. That's how we made our money last year. We just
silver. Well, silver and gold, and the ETFs on those.
But we didn't really trade the ETFs that much. We basically traded the AGQ. So most of the move was in AGQ. So even then, last year.
That's what I mean. That is AGQ is an ETF. That's what I mean.
Yeah, and so you kind of have to think beyond normal. That's kind of what the environment makes you do if you're going to make money. And fortunately, we were able to do that. Although there was that great short signal in August. Which we should have been much more aggressive than we were on. But had we been, it was a pretty good one. We know some people who did do pretty well on that. But it's almost like you kind of have to make progress. You sort of have to think outside the box. And I'm not comfortable being in that sort of situation. I don't mind pulling a trick here and there, but when that seems to be that's what you have to be doing most of the time, it almost seems not even worth your time. Yes? No?
Yeah, no, I think this period is no different than any of the others. It's just the ingredients are different that are making for a sloppy environment. So it's just like the other times. I noticed that when people start throwing in the towel, that's often a good indication that the market is going to find some sort of discernible trend, or not necessarily the market, but something out there, some vehicle. For instance, silver and gold last year did find discernible trends, and I think that people who stopped looking at the markets altogether obviously missed out on those trends. August of last year was that was a very challenging period because the market wears you out. By the time we were in August of 2011, the market had not had any meaningful trend in any direction, and so the model had a string of false signals. And then August came along, it took its sell signal, and then the subsequent 5 signals on the model were all true, which made all the difference. And again, that's the rhythm of the model, though. It does catch these short, downswings, or to catch these longer-term trends, and that those will make the differences between success and failure in terms of outperformance.
All right, so there you have it. Okay, gold. What's gold doing? We're not really excited about gold. It's all going to depend on QE, I suppose, and even then, not totally sure what's going on. You've been just tracking along the lows, and nothing really there. That's exciting. Silver is the same thing. Nice move off the lows. You saw some volume in the futures, but does that translate into the GLD? Not really. So you're pulling back to the 50-day. I'm not thrilled with gold. I need to see it break out probably between through the 644 level, I think, on the future, 1644 rather. But now I don't even know if that would do it, because you got the 200-day up here at 1656. So we're not really interested in gold or silver right now. Correct, Dr. K?
Sorry, say that again. Gold and silver are not. They're just in a basing pattern, so there's nothing going on.
Yeah.
I have my price band set pretty wide on these, just simply because they really need to show me something, constructive before I'm going to get interested in either again.
What's your take on the VIX? People are asking.
There's, it's a supplementary indicator that I'm using with the UVXY model, and in and of itself, it's not useful. It doesn't. VIX in and of itself is not going to trigger the model. The model triggers on other variables, but I am using the VIX as a secondary indicator. But as far as UVXY and these VIX-related ETNs and ETFs, there's not long-term correlation. So don't expect, it's just because the VIX is going to go a lot higher, say over a period of 5 weeks, doesn't necessarily mean that the ETNs are going to do the same. On a day-to-day basis, on the other hand, there is directional unity to quite an extent. So in other words, when the VIX is up, expect UVXY to be up as a rough correlation.
All right, let's go through some questions here. Obviously, let's see, Monster comes up. There's really nothing here. We talked about this one before. It violated the 50-day moving average here. So if you're using the 50-day moving average, you should have been out of that one. It looks to me like it's headed for the 200-day moving average. So is it a short? I guess if you wanted to short it, use your 10-day, maybe a little more as your stop. Maybe even the 20-day moving average, the green moving average here. But other than that, there ain't anything happening with MNST on the long side, and maybe forming a kind of a head and shoulders type thing. You can kind of see it on the weekly chart here, and so maybe that's what's going on here. Maybe you're going to break for the 200-day moving average down at 58.72. So that looks pretty bad right now. Whoops, I'm going to do that. Intuitive Surgical is another one. This was a nice looking stock for a while, trending very nicely. Had a big gap move out of the trend channel here and rolls over, and now kind of breaking down. I would call this a late stage cup base, cup handle that has failed, and so you might consider shorting rallies up into the 501 area, which is where the lows here are. And let's see if I make this a little bigger for you. You have the lows here, so you could rally up right in there, which you did last week, and then you're not really able to make any progress here. It looks like it wants to go lower to me, so it could be a short using the 200-day as your stop. But to me, I think you're 4% away from there. I'd rather see a rally up in the 200-day moving average. Maybe some news from the Fed today gets things going in that regard. But other than that, this may take some time to play out. But yeah, it is a late-stage base failure here, and starting to come down. So the other thing is you did undercut this low, so there's always this outside chance that it could form a big, ugly double bottom and head higher. But it's looking pretty ugly. Let's see. We already talked about NetSuite and Watson Pharmaceuticals. Everybody always wants to know about RGR, Sturm Ruger, guns. Not anything there, not that I can see. I mean, you see anything there, Dr. K? I wouldn't own it. I don't know if I'd be shorting it.
It's a straight up off the bottom kind of move, and even in a positive market environment, I wouldn't be real excited about this kind of pattern. And I'd like to see some sort of handle. It's too extended right now.
Somebody's asking, are you concerned about the fiscal cliff, and if so, what do you think will happen to high dividend stocks that have held up well so far this year? To be honest, that's not even something that I really think about. How are high dividend stocks going to react to a fiscal cliff? Why do I need to care about that? I'm just focused on price volume action of the market and stocks, and that's basically it. So I don't have any thoughts on that one. Do you, Dr. K?
High dividend stocks aren't really what we're interested in. We've never been. High dividend stocks tend to be slower movers price-wise, and we're looking for the fastest horses out there that have constructive fundamentals and technicals. So in other words, we're looking for the next Microsoft, the next Google, that sort of thing. And we were certainly hoping that Facebook might prove out, but it might take another year or longer, or maybe it won't prove out at all. It depends on how Facebook plays its cards. But right now, we certainly won't touch that one.
Yeah. Somebody asked, Dr. K, is a UVXY signal coming soon?
Very good question.
Were you able to travel in the future and tell us?
As I've said, the model has gone through more fine-tuning, and it is ready more or less to start issuing signals. However, it is designed such that it doesn't have to be you don't have to be in a trending environment for it to work well. So as far as that goes, expect a signal anytime between tomorrow and and a few weeks from now. That's the best I can give you.
All right. Would you say the market generals are breaking down? You've seen a few, Intuitive Surgical, Priceline's breaking down today. It's going lower. I mean, I'm over here watching this thing go lower, hitting lows on the day. Somebody's asking about 3D. I think that generally, to answer that question, the generals or the big leaders, is a lot of sloppy action. So not a lot coming through our screens. I notice even the advanced decline line on the NASDAQ has been trending lower over the past month, even though the market's basically trying to move a little bit higher to sideways. And what you really want to see, we don't really worry about advanced decline line on the NASDAQ making a new high per se, but you do want to see breadth improving as the market moves higher, and that's not really happening, and that's because you are seeing the generals or a lot of leading stocks, engage in a lot of iffy sort of action, and so that's a problem. Yeah, so, and that's why, like I said, I don't think, like I said, the best trade I can have is Apple coming off the 578 area up through the 50-day moving average, and that's my best trade between that, Amazon, Priceline, and LinkedIn. I don't think this is a very promising market. 3D Systems, there's a nice shakeout, but again, if you had owned the stock, that's a big move down. That's more than 20% off of yesterday's close. I don't know how you sit through that, but we never liked the stock, and we've talked about this several times. Just very erratic. I know the technology is very promising, and they're making a 3D printer for home use, and all I can say is I don't know really if I'd want to have my pubescent kids messing around with a 3D printer. Who knows what they'd be doing with it. I think it's maybe a little bit too much technology for the home, so. I am happy to announce, though, that I did get an iPhone for my wife last week after her BlackBerry died, and of course now I have an iPhone and she has an iPhone, and as I've warned you all before, Apple probably doesn't top until I buy an iPhone, and I have. And my wife is even further behind on technology, and now she has her iPhone. So take it from there, people. Alexion, someone's asking about, that broke out, acts nice, but to me, it seems a little too obvious. Maybe it's late stage as well. It's had a long run. So I'm a little skeptical here. I'm not a buyer. Somebody asked about CF Consolidated, or CF Industries, rather. Wasn't that, I'm always thinking of Consolidated Freightways whenever I see that, but I don't even think Consolidated Freightways exists anymore. Is this a short? That's a good question. This is kind of a sloppy, straight down, straight up kind of cup thing on the weekly chart here. It would need to break down to the 50-day, but I guess if you really want to be brave and come after it, it does look weak here, but I'm not so sure if it's if it is a short just yet. I mean, you got this ugly pattern here, sort of a pod, a double bottom pod, and then here you got this sort of mini pod, and straight down, straight up. It does look vulnerable to failure to me, and on the daily chart, coming down, if you're going to short it, maybe you just hit the high of the day, use the high of the day as your stop at, what is that, 19837. You're trading 19595, so, about $3 higher, $2 higher, something like that. Let's see, some other stocks. SAM, not a stock that I'm into. I mean, is it a short? I'm assuming that people are asking whether these are shorts. This is a late-stage breakdown, but the stock doesn't trade enough volume. This thing trades 107,000 shares a day. I wouldn't short it. Certainly wouldn't be long it. So I like to see stocks trade at least 1 million shares, preferably a lot more than that if I'm going to short them, okay? So this is not something I want to short, but it sure looks ugly, and it definitely looks like a late-stage failure. I'm not sure if this thing ever had a move. Yeah, it did kind of have a move. Let's see. Let's shrink it so we can see the move. There's a big move. Yeah, it could be a late-stage failure, and it's going to bust, but there's not enough volume. This thing doesn't even trade 500,000 shares on a weekly basis, so that's a little bit too thin for my blood, so I'll pass on that. In any case, let's see. Next one. People ask about IBM. Let's go to the daily chart. I don't like IBM as a buy, and I'm not sure necessarily that it's a short. Let's see. I don't know. Maybe this is a spot where it could roll over. If the market rolls over, the big stocks, the big index stocks, Apple, Amazon, Baidu, Priceline, IBM, they're all going to go over too. So you have this sort of weird wedging move, and you notice how the weekly ranges are very wide. So there's potential here to short it if you're using the high of the week, or you could use the high of the day at 198 as a stop. That's a possibility if you want to short. But I would tell you that if you're going to short anything, keep it on a tight leash. I don't really let anything get out of control, and 6-7% stops for me are out the window in this market. I'm usually using 2-3% max, and that even includes long positions. But this does look like an ugly situation here that I would not want to be long, and yes, it might be a short here, and it could be shorted. As Ross Haber likes to say, you can make any trade you want as long as you know where your out point is, where your stop is, and that's all you need to know. CRM, I think, is a dog, and it's ready to blow. So I tried to short it this morning on the rally, on the bump, and I can't borrow shares. So maybe that means everybody's short it. So if you can't do that one, maybe you go after VMware. I don't know. I don't really like the position there. It's not that great. F5 is the other big cloud stock, but I don't know. These are kind of, the environment's still a little bit iffy here. I prefer to get stocks, hit stocks that are higher up in their patterns at this point. So to tell you the truth, I actually like something like IBM as being a potential short, mainly because it's a little further up and near the highs in here where it could find resistance. So, and I'll bet you I can probably borrow that one. Might check it out later. Somebody says 3D printers are mainly for industrial use. Yes, we know that. DBC and DBA. Not much going on there, so we're not buyers. Are you a buyer of these, Dutch K? The agricultural commodities?
They really put me to sleep.
Somebody says, would
no.
these ETFs be good as an investment for someone's retirement account? I don't know. Probably, if you ask that to a broker, you'd probably say yes, and he wants you to open an account so he could trade you into those and take your commissions. I don't know. To me, I don't think right now, if you're looking at something where you're going to buy and sit and blow it off in a retirement account, that's the idea. I don't really see anything there. Onyx, big move. It's coming in, so I'm not a buyer. The only way I'd be buying this is close to the 70. So, but also you have two gap ups already. It's a little bit too obvious. Is that Ulti or Ulta? Ultimate Software. I'm not a buyer of that. That's ugly. But also, in case that was a typo on that question, Ulta is heading for the 200-day moving average to me. Ugly. Not looking good here. Let's see. Any thoughts on IYR as a long? You're kidding me. No, I don't think so. How about you, Dr. K?
Oh, this is the real estate one, right? Yeah, it's the idea that real estate is going to turn around because interest rates are so low. But I mean, again, yeah, we'll see it. We'll see. I'd like to see more evidence of that before I put my money in the line. And so I'm not interested in this one at this time.
From our perspective, to me, this is kind of like a throw a dart sort of trade. IYR is a long. Oh yeah, go long IYR. I don't understand the real estate market as well as I understand stocks or neurosurgery, so I'm not really going to delve in any of those areas in any meaningful way. I kind of leave our real estate purchases to my wife, and she doesn't know how to do anything wrong there because I think every piece of property she's ever bought is worth at least twice what we ever paid for it. So maybe I'd let her tell me what she thinks about this. But this is something that's outside of our realm. If you are knowledgeable about real estate and you think that U.S. real estate is going higher or it's bottomed or whatever, then I guess you could make a trade. But from our perspective, it's not really our sort of thing, and it would be kind of silly for us to tell you whether we think it's something you could buy. I don't think InventSense is something to buy here. Negative earnings growth, maybe you just caught a bunch of shorts in here and you jacked it for one day and it's holding in tight, but we're not buyers.
Yeah, generally it doesn't pay to be a bottom fisher unless you've come out of a major bear market.
Yeah, I like this one. ICE looks pretty ugly to me, and look at this weekly pattern. Just really wide, loose, ugly. Trying to make this sort of jagged-looking cup with handle. To me, I'm looking at this one today. This might be a short. And notice how it's pushing back up in here, but you could use this area, maybe 132 as a stop. But that looks kind of interesting to me today. That's one stock I'm keeping an eye on. Some other stocks, Stratasys has continued to act okay, but it's pulling in. But again, this big weird floppy action and just nothing really coherent there. Nothing really that I think is all that playable right now. And it's a little bit thinner stock, but it does trade what 389,000 shares a day. It's kind of thin for me, so that sort of volatility I don't really care much for. Almost a 10% swing today. So again, you're seeing that type of action. And so when you're seeing stocks act like this is telling you something about the market, and you should probably heed the message by backing off, not really playing. If you do play, for example, I was talking about the 4 positions we took in our managed accounts program, Strategy C, which invests in stocks. We went long 10% Amazon, 10% Priceline, 10% LinkedIn, and 20% Apple. And I thought we might get a big move on Apple yesterday, so we added a little bit yesterday, but then we ended up puking it out right away. And we just see, going in 30, 40, 50%. If we get stopped out 2, 3% down, we're really risking about 1 or 2% of the portfolio. So it's pretty well contained. So if you do want to come in and try some things, I think you're beating your head against a wall, and a very hard reinforced brick wall at that. And so I think a lot of these stocks sort of indicate that as well in terms of their action. It's just sloppy and choppy and incoherent. So, our thought is just take it easy, relax here, and see how things develop. If you're so news-oriented, a real trend is what you're looking for. Don't force it, and there's no reason to force it. So I would just be mellow. Dr. K, any final thoughts from you? That's pretty much all we've got. Today,
Yeah,
I hope
I
it's
mean,
somewhat
it goes
helpful.
back to the whole thing of staying out of the market when the window's not open. The window hasn't been open, and in fact, like I said, over the last several years, the window hasn't been open for more than generally 3 months at a stretch on the long side. I'm speaking strictly long side here. And if you had just gone in when all the ducks are in a row, and you know that because all the good stocks are starting to issue pocket pivots and viable gap ups and things, and you trade for that period, and you keep your stops reasonably well set, that's all you need to be trading. And of course, that's much easier said than done, because the market will throw curveballs at us, and it looks like the market's going to go or look like it's going to sell off, and so then we want to get involved. And the idea there is, a lot of people would really only have to trade the markets about 1/3, maybe a quarter of the time that they normally trade it to do just as well, if not better. And all of that said, I still like to trade the markets. That allows me to go to the research, back to the research drawing board and test ideas, which I do with frequency. And I'm going to continue to do that. But it's always a question of how much money do you risk during times like this. I keep it small, and I keep your stops tight.
Yeah, I think our short-term model that we've been using to trade on an almost intraday basis, that has worked out pretty well, reasonably well. In this environment. But if all we're doing is flipping the skews and the TQQQs back and forth, or the UVXY, I'd say it still seems like a lot of work for not much return. Somebody's asking, where would you short CMG? At this point, it's kind of gone, so go find something else. That's what I would say. Don't waste your time. New book is coming out. Somebody's asking about our new book. It's actually in production right now, and we're supposed to be seeing a hard copy of it, a production copy, any day now, I believe. So, but it is expected out September. I think that's the schedule. So it's part of Wiley's fall lineup. So it'll be coming out. So don't worry, you'll be the first to know. Short HLF, somebody asked. Last couple of questions I'm going to take. I don't know. Again, I'm not really sure here. And today I kind of like some of these other ideas we're looking at. I actually like the IBM idea better than some of these, because that looks like it could come down and test the lows again. Very sloppy, and on the weekly chart that looks better. So I'm not sure I like this so much. On the weekly chart, this kind of looks funky. It's getting support. Let's make this a little bigger. So it did run into resistance at the 200-day. I guess if you really wanted to short this, you could hit it here or a little higher if it rallied to the 200-day again. It did that yesterday, but I'm not so sure. This one's been a little bit erratic and it's been somewhat news-oriented, but it could work. You could take a position, like I said, as long as you have a stop. So somebody's asked about TCBI. The Texas Bank share, this one acts okay. It's really thin, and so not anything we would buy, but it's acting okay. I can't say anything. I'll give you another one I'm looking at on the short side. whoops, a little dyslexia there, sorry, is Tibco software. So kind of in a little, I don't know, it's like head and shoulders type thingy here. And if you want to call this a cup with handle, it's a low handle. It's flawed. It's starting to break out. I'm looking at hitting this one. It's bouncing a little bit for me, so I'm actually looking to hit this one out here somewhere if it gets back up towards the 50-day moving average. That's one to keep an eye on. But that's pretty much it. Time to take a vacation, I think. I'm all for that, actually. And we're always on vacation, and we're never on vacation. So somebody says short euro if they QE. I mean, again, that's, we're not into currencies, so that's not our expertise. So, if you think the euro is going lower, then short it if they announce QE. I'm sure if they do, you're going to see the euro decline in value, so you could try it. But we don't have any real thoughts on that. Do you, Dr. K?
No, nothing constructive that I'd like to volunteer. I mean, I have my own ideas, but they're not strong enough for me to risk my own money.
EUFX is illiquid. Boy, you're not kidding on that one. What's this thing? It trades by appointment. So if you guys know the number to call to make an appointment to trade this thing, let me know, and then maybe I'll buy this. Isn't there another one, though, the EFX? Is that the one? No. What is the FXE, I think it is. Is that it? Yeah, the euro.
Yeah. FXE.
Shorted here. I guess maybe this is resistance is going to go lower, but that's a currency thing. We don't do currencies, so.
I mean, it's very easy to say on the long term. When someone says the euro is going to blow apart within 6 months to 6 years, I would agree with that statement, and therefore, yeah, you could. I suppose if you really believe in that heartedly, you want to keep your capital tied up in something like FXE for the next 6 months to 6 years. It's probably a pretty good bet if that does happen. I think it will.
Yeah.
But again, that's a very long-term, more macro kind of play, which is not my style of investing.
Yeah, and if they don't do any QE tomorrow or the next day or whenever, then the euro could easily rally. So I don't know. It's kind of neither here nor there for us. Just a weekly chart of the euro trust ETF, and I don't really see any necessary trend that I need to jump on right now. So, but we got a couple ideas we're looking at, on the short side that I gave you, and I think whoever came up with the IBM name, I think that's something to look at, actually, to tell you the truth. So thanks for that, and that's all I got. So if you guys got any more questions, feel free to email us at info@virtueofselfishinvesting.com, as always, and we'll catch you guys next time. All right, take care.
So long, everyone.